Hello, this is Jennifer Parrish, Superintendent of Poquoson City Public Schools. I would like to share information about the proposed budget that I presented to the school board on March 21st. First, let me share what our budget objectives were this year, and these are very similar to the ones we've maintained for the past 8 years. We wanted to make sure that our instructional programs remain the same, and if it's possible, that we enhance those programs through the budgeting process. We also wanted to provide additional compensation for all of our employees and to continue the transition to a new teacher pay plan. This year, we're in the first year of a 3-year transition plan. Just a reminder about where we have come from since fiscal year 10. We've made approximately $5 million worth of programmatic and personnel reductions to offset the loss of state revenue, also to pay for the increase in VRS rates that we've experienced, as well as other cost increases, which include everything from health insurance to utilities. Throughout this time, the city has provided approximately $1.4 million in additional funding. They've tried to offset some of the loss we've experienced from the state, but in no way could make up all of it. We have also during this time period eliminated 54.5 positions. And while we've had an enrollment decrease throughout the years, we've cut 11 teaching positions beyond the enrollment loss. This means those 11 teaching positions should be in our budget. Unfortunately, we cannot afford to add them back into it. We also eliminated instructional programs in fiscal year 12 and fiscal year 13 because we just had nowhere else to go when making those changes as a result of the reductions of state funding. Let's talk a little bit about state funding. If you followed my budget preparation or budget presentations through the years, you'll see that this first bullet has been on my prior ones. The state has cut $2.1 million in its share of standards of quality funding, represents 20% of our current state funding. Remember, the standards of quality are the minimal requirements that we must meet. They're the requirements that the state holds for us, yet what you can see here is they're not even fully funding them. It's important to know that the state per pupil funding now is almost $600 less than it was in 2009. If we use the enrollment that we're projecting for next year, it would mean next year we'd have over $1.2 million more dollars in our budget. Imagine what we could do if we had that funding. The percentage of public K-12 education share of state general fund has dropped from 35% to below 30%. We certainly understood why we needed to see reductions during the height of the recession. But what this figure shows you is that K-12 education is less of a priority for Richmond because our piece of the pie is smaller now. It is always important to know that all state school construction funds were eliminated. So if a school division is to build a new school or undertake a major facility renovation, all funding for it will need to be provided by the locality. Also a reminder that last year the General Assembly put a 2% raise into the budget, but we were informed in November that we were not going to receive any of the funding for that 2% raise in our fiscal year 17 budget, which is this year's budget. We continued to provide the 2% raise for our employees, but we had to shift funds and make changes to our current budget to ensure that we could afford it. And finally on this slide, you see a statistic that comes from a very recent JLARC study. Remember, the JLARC is the group that does research at the request of the General Assembly. You see here that Virginia ranks 11th in the nation in per capita personal income, but only 38th in per pupil spending. So in other words, we have many people in Virginia with high personal incomes, but we don't spend nearly as much money as other states do on our students in our classrooms. Let's just take a quick look at our operating budget over time. You see here in fiscal year 09, just before the recession hit, that we had over a $22 million budget, and you see that steep decline. Then in fiscal year 12, you see a slow uptick throughout the years. It's important to note that part of that is because of the VRS rate increases. The General Assembly essentially borrowed from VRS during the worst of the recession, and they have now over the years increased the rates to make up for that fact. So yes, we've received additional money from the state because of the VRS rate increases, but that money comes into our budget and then goes out to VRS. It hasn't helped us in the classrooms. And in fact, the money that's been provided for the VRS rates doesn't nearly cover the actual costs of those rates to the school division. There have been some slight increases in other areas as well from the state, but it really is important to know what's happening with VRS. And what you do see this fiscal year, we're still below where we were before the recession. The story with local funding is very different from the state. As I mentioned earlier, between fiscal year 10 and fiscal year 17, we've received approximately $1.4 million from the city of Poquoson. We've used that funding to save teaching positions, as well as provide the local match for state-funded raises for SOQ positions. I'm going to talk a little bit more about that in a future slide. And it has also helped us provide compensation beyond what the local match is that was required by the state. So we were able to provide some compensation increase without the assistance of the state. We can't talk about a Poquoson City Schools budget without talking about enrollment decreases, because this continues to occur for us. You see here what the enrollment number was in 2006 and 2016, this school year, on September 30th. We've decreased in enrollment by 522 students during that time period. You do see in brackets our enrollment without preschool. We have a small preschool program, and the state does not include preschool in its funding formula. So I wanted you to see exactly what the enrollment is without preschool. Now, from last year's September 30 count to this year's 30 count, we've lost 31 students. We have gained some students since September 30th. But even with that said, looking at the data from the Weldon Cooper Center, which does the demographics for the state, and our current kindergarten registration, we're estimating that we'll see a loss of 26 more students. Please note that even though there is some construction going on in the city, we have to be conservative with our budget estimates so we don't move into next year and have to make cuts within the budget mid-year if we have fewer students than we projected for our budget. Hopefully, with some of the construction, we'll see less of a loss in the coming years, and perhaps even finally a leveling off of our enrollment. Let's talk about the projected cost increases for fiscal year 18, or next school year. You see here we're going to see a tremendous increase in our health insurance costs, $223,197. This is based on an 11% increase. I'm going to talk extensively about health insurance further along in this presentation. I mentioned the increase in VRS rates. You see it's going from 14.66 to 16.32. That comes at a cost of almost $195,000. Also attached to VRS, we see an increase in the rate for the retiree health care credit of $14,000. So in reality, we see a cost in VRS of about $210,000. We also see an increase in contracts, utilities, and food service expenses of just over $59,000. So our total projected cost increase is over $492,000, or very close to $500,000. Let's look at the state funding situation this year. First, you note our enrollment loss. I said that we were projecting a loss of 26 students. That costs us about $116,000. You see that the state has adjusted the sales tax projection, so we may get a little bit more funding to the tune of about $16,000. I mentioned the VRS rate increase and the fact that we received some funding to help offset that from the state. So you see we're going to receive $86,608. Remember, the total cost of the VRS rate increase to the school division is about $210,000, though the state doesn't even cover half of that. And again, while this shows additional money coming into our budget, in fact it goes immediately out to VRS and doesn't help us in the classrooms. You see that we are seeing an increase in supplemental lottery per pupil of over $279,000. This does give us some flexibility, and this funding can be used to help offset the VRS rate increase as well as compensation, which I'll talk a little bit more about in a future slide. It is important to note that when the lottery was established, it was meant to provide additional funding to school divisions for school construction and other major projects. It was to be on top of the school construction funding that was already in the state budget. But now the lottery funding is really supplanting money that used to be in the general fund for the school division. My hope is that we continue to have good lottery years, because I'm not sure what would happen if suddenly in the middle of the year we were told we weren't getting this $279,000. The next line in the table talks about state funding for a 2% raise for SOQ positions. I want to make sure that everyone clearly understands this. First, take note of the fact that the state is only providing raises for SOQ positions for February through June, not even half the year. So it's really not even a 1% raise for our employees. Also, because it doesn't start till February, like it occurred this year, there is a chance that the state could inform us sometime prior to February that we're not going to get any of the funding for a 2% raise that runs from February through June. Also, it's important to know that our state SOQ funding only covers 67% of our employee positions. Let me give you an example that explains this. According to the SOQs, our kindergarten classrooms can have 29 students in a classroom with a teacher. We will never have a kindergarten classroom of 29 students with one teacher. It is not the right thing to do for our students. That means we need to hire additional kindergarten teachers so we can level out our classroom numbers. Any teachers that we hire beyond that minimal SOQ requirement is fully covered then by the locality because the state is not providing funding for it. That's why they only cover 67% of our employee positions, and it's important to note that they only cover 62% of the salaries for those covered positions. So in other words, the school division, with the support of the locality, has to provide the extra funding for the SOQ positions that are covered, as well as full funding for any positions that are not covered. What you see here then is the net projected state funding increase is $321,290. Let's move on and talk about compensation. Part of this budget proposal includes a transition to the second year of the teacher step pay plan that we implemented this year. Again, we created a 3-year transition plan to try and make our teacher pay more competitive with our area. So the budget proposal I'm providing now says that our teachers will each move up a step. When the teachers move up a step, if their increase in pay does not equal 2%, some additional funding will be provided to guarantee that they have a minimal of a 2% increase. There are teachers that will move up a step and make slightly more than a 2% increase. All other employees will receive a 2% compensation increase. Again, this means that all of our employees in the school division, at a minimum, will get a 2% compensation increase. We do include the proposal to increase our daily pay rate for substitute nurses and substitute teachers by $5. We struggle sometimes in getting substitutes, so we need to be more competitive with our pay for them. This does help our cause, but certainly doesn't put us number one in substitute nurse and substitute teacher pay on the peninsula. So the total cost of compensation increase is $318,911. Remember, the state's only providing $54,000, and that assumes next year they come through with the funding. Let me share what this looks like for our teacher compensation increase. So, the average increase for our teachers will be 2.07%, which would be about $938. The lowest increase would be 2%, because again, remember I said everybody gets at least 2%. So that average increase is $800. The highest increase for a teacher will be 3.56%, and that's going to be for certain teachers who move to certain steps, so that average increase amount is $1,601. Note that we have no teachers moving to the highest point of our scale or moving off our scale, because that actually creates the highest increase of 5.19%. But again, none of our teachers are at that point this year, which is why you see this increase of 3.56%. I wanted you just to be able to take a look at what our teacher pay plan looks like. In other words, the plan that we're transitioning through in a total of 3 years. I don't expect you to be able to read all the numbers and figures on this screen. What you see here is we're in year 1. We're proposing that we move to a revised scale in year 2, and by revised I mean we're ensuring everybody gets at least a 2% raise, which means our year 3 scale has been revised as well because of the changes to year 2. You could follow through up here. A person on step 1 moves to step 2 this year, and they would move to step 3 next year, and their salary would increase each of those years. Now, what you see in the far left are 2 sections that are highlighted in gold. That is where we've built some compression into our scales. We did this when we created the scale to ensure that we could make this scale affordable for us in future years. Know that if we move to the revised scale in year 3 next year, it'll come at a cost of $165,000. Actually a little bit less than what we had projected a year ago because of what we're doing with our scale in year 2 for next year. Now I want to move on to health insurance because I've mentioned that earlier. Health insurance continues to be of a considerable cost to our school division, as it is for employers across the country. We have fully covered the cost of the premium increases during the last 8 budget cycles. In other words, we have not asked our employees to pay increased premiums. During that time, it must be known that the total premiums increased by 56%. What we did do during that time was make changes to copays. We also eliminated one of our plans and added in a high deductible plan. So we currently have 2 plans, a high deductible plan and a POS plan, or some may call it an HMO plan. To give you a sense of what benefits cost us, PCPS pays between $6,330 and $16,426 per year towards an employee's health coverage. The average for that is $10,705 for employees who are participating in our health insurance this year. Please know that average is in line with the other school divisions on our peninsula with whom we compete. I just wanted to share with you graphically what it looked like for the increase of premiums over the last 8 years. You see here with the yellow line is the school division. So this is the increase that we have fully funded during the last 8 years. You can see it's continued to go up with one slight dip one year. That was when we changed healthcare companies. You see below where the employee line is. They've experienced no increase in premiums throughout this entire time. So how do we come about making these health plan changes that are included in this proposed budget? The first thing we did was do a survey with all of our employees. 83% of them responded to the actual survey. That is a terrific response rate, and we appreciated the fact that they took time to take that survey. We've worked with an insurance consultant and received 22 considerations to reduce health insurance costs. We took 8 of those to the benefits committee. To give you an example of why we eliminated a large number of them, one of those considerations was to move everybody in the school division to a high deductible plan for next year. We knew this is not something we wanted to do with our employees at this time. So we took 8 considerations to the benefits committee. The benefits committee is made up of 3 teachers or staff members from each school, and all of them are currently on our health insurance plans. In addition, there were school board office employees also working with the benefits committee. So here are the plan changes that are included in this proposed budget. First, all new employees hired as of July 1st, 2017 will be placed on the high deductible health plan. This will save us $11,350. In coming years, we anticipate that savings will increase because the high deductible health plan has less expensive premiums for us and for our employees. Next, we're increasing the prescription copay for those who are on our POS or HMO plan. The increase depends on what tier the drug is actually on. So for example, on Tier 1, which includes generic drugs, the increase will be $5 per prescription. Tier 2, which are brand name drugs, will see an increase of $10. Tier 3, an increase of $25. And the 4th tier, which are specialty drugs, will remain at a 20% cost for our employees. We are proposing a premium increase for our employees on the POS plan and a slight increase for one group on the high deductible plan. I'll speak more to the high deductible plan in the next slide. The largest increase for employees on the POS plan, not related to the next bullet that I'll explain in a minute, is $29 a month, or about $348 a year. Please know that all of our employees will next year have the same compensation or additional compensation. In other words, what we've ensured is that with the premium increase, nobody was going to experience a loss of pay for the next school year or the next fiscal year. Now let's talk about the surcharge of $100 a month. One of the survey questions that we asked of our employees is, would they support it if we moved any spouse that could receive health insurance from their own employer off of the Poquoson City Schools health insurance plan? In other words, we do have some employees who have spouses on our plan that could get health insurance from their own company or business. There was about a 50-50 split on that question on the survey. So in working with the benefits committee, we determined that another avenue would be to charge a surcharge of $100 a month If an employee has his or her spouse on our POS plan, and they could get health insurance in their own place of employment. Now, there will be no spousal surcharge if they are on the high deductible plan, again because the high deductible plan is a cost-saving measure for the school division. Please know that there are school divisions that do not allow spouses to be on the health insurance plan of the school division if they can get health insurance at their own employer. Let me talk about the high deductible plan for a few minutes and our health savings account. One thing that we're proposing in this budget with actually adds a slight cost to the school division of $1,029 is to add a prescription rider. What this means is our employees are on the high deductible plan and who are taking maintenance drugs for asthma, blood clots, diabetes, heart health, blood pressure, cholesterol, osteoporosis, and stroke will actually get some of those maintenance drugs for free if their drug is listed on the prescription rider. So again, this would be a benefit to our employees and certainly would be an incentive for them. Currently, our school division only provides a one-time contribution to the health savings account. If you're unaware, a health savings account is funding that assists you with paying your medical bills, and it is portable. So if you leave us, you can take that account with you. And if you retire from us, you can use funding from those accounts to pay for medical expenses. And it helps you in the area of taxes. What we are proposing is to make some changes to what we're doing in terms of contributions to the HSA. What you see in the table below on the far left, that's currently what we do. Just one-time payment, depending on what tier you're in our health insurance plan. We're proposing on changing that payment in one of the tiers, employee plus child, so they would receive $900 instead of $1,200 because one child will typically have lower health care costs than multiple children or a spouse. So you see here, we would still do the one-time payment into an HSA anytime an employee moves to the high deductible for the first time. What we're also proposing as part of this budget is that we also provide an annual contribution to our employees' health savings account. So if you're an employee only and next year you move into the high deductible plan, you would receive $600. And then every year thereafter, under this proposal, you would receive $200 into your HSA account. And then you can see the amounts vary by employee plus child, employee plus children, spouse, and family. It may be in the future that we can increase that annual funding that we put in the HSA, but we need to be somewhat conservative with it at this time because we do not know how many of our employees may move into that at this point, but we do know all of our new employees will. It is important to note that even by putting annual funding into our employees' HSA accounts, we still save money in terms of the premium cost to the school divisions by doing those because of the nature of the high deductible plan. That is the reason why we're proposing the changes that we are proposing. Every year that I do a budget, we always have to find savings in personnel because it is the largest portion of our budget. This year I'm proposing the elimination of 1.5 teacher FTEs, but what I can say is we're capturing those through attrition and that all of our instructional programs are maintained at the same level with the loss of those 1.5 FTEs. We also capture savings because some retirements that we know and some folks that are leaving. That comes at a savings of $68,763. So our total savings in the area of personnel is $205,492. So here's our budget summary. As I said earlier, our total cost increase is over $492,000, or almost $500,000. Our total cost of the compensation is almost $319,000. Our additional state funding is $321,290. Again, remember within that, only $54,000 for the increase of the compensation plan from the state, and also only about $89,000 for the increase in VRS, with us having to pay the rest of it to meet the $210,000 cost. You see here again personnel savings, and then also the total of the health insurance changes that I outlined earlier, savings of $89,613. Our total budget shortfall becomes $195,000. So as likely you may predict, this means that we're requesting the $195,000 from our locality. Fortunately, our city manager and city council members have continued to place our school division as a funding priority, and I'm confident they'll continue to do so in the coming years. Because the state continues to underfund K-12 education, we are now having to turn to our locality once again. The $195,000 will enable us to provide compensation to all of our employees in terms of a 2% increase and to transition to a more competitive teacher pay plan. The next steps for our budget process are listed here on the screen. We have a public hearing on my proposed budget on March 28th. On March 30th, we'll have an additional school board meeting if they do not vote on the budget on March 28th. We'll provide the budget to the City Council on March 31st, and we're looking forward to a joint City Council school board meeting on April 24th. I cannot tell you often enough how challenging budget development continues to be because of the state's failure to fully reinvest in K-12 education. They just are not bringing us anywhere near where we were before the recession. Yet despite that, we continue to face new unfunded mandates from both the federal and state governments. So they place new requirements on us, but they do not provide the funding for them. And as we begin the discussion in the near future about a major middle school capital project, we need to keep in mind that we just do not believe that the state will ever plan to return to pre-recession funding. I believe that will impact that discussion. I want to thank you for taking your time to listen and watch this budget presentation. As is always the case, feel free to contact me if you have any questions.